Hi, Dan.
Good morning, Trevor.
Hi there.
I've just made you the presenter. I think you should be able to show your screen. Yes, we're looking at Euro USD.
Okay. Okay, I'm ready when you are ready to start.
Well, I make it 8:59, so we should probably give them a few seconds to. Well, we said officially we should start at 9 o'clock, so we'll let them get started at 9. I'm just looking at your notes. Okay. Right, I make it 9 o'clock, Trevor. I think we can get underway. Don't think anybody's going to be worried. Okay, hello everyone, and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes, but we never do. We always spill over by a few minutes, so please bear with us. If you have any questions for Trevor, you can ask them in the questions tab of the GoToWebinar control panel, and I'll pass those over to him. We remind you that this webinar will be posted to our YouTube channel in a couple of hours' time, so if you'd like to watch it again, you can do so there. And we'd also love it if you subscribe and click the bell to get notified. The webinar handouts can be downloaded from the handouts tab of the control panel as well. If you're having any trouble locating them or downloading them, please just let me know in the questions tab, and I'll send you a link and you can download them. The first handout is a guide to the different technical terms and indicators that Trevor uses when he's conducting the webinar. And the second is a CFD guide, which explains the different products that we offer at FX Choice. Speaking of offers that we have at the moment, be sure to check out our $500 refer and earn special on our website. And if you're watching this on YouTube, these handouts and links to the promo will be available in the description box. For those of you who don't know Trevor, he has over 40 years experience as a technical analyst and trader. He was global head of technical analysis at Bloomberg, so a veteran, shall we say. We're in safe hands, I think, today. Trevor, over to you.
Okay, thanks very much, Dan. Welcome everybody. Thanks for spending, if it's a May bank holiday with you, then thank you for spending it with us. Just to remind you, please ask any questions you want at any point. Put them in the chat box to Dan, not to me, because I can't see them, and he will interrupt me at any point. But we like questions, so please do.
The more the better.
The more the better, yeah.
Mm-hmm.
Right. So we're going to start with the currencies, and again, I will start with the relative rotation graph of the G10 currencies. And those of you that are regulars will know that anything on the right of this vertical line is outperforming the dollar, and anything above the horizontal 100 line is with positive momentum. So furthest to the right still is the Norwegian crown, which we were talking about last week. The Swedish also, that was up here last week, but it's still, this is compared to the other currencies, this is the best one to be in. Nothing is underperforming amongst the G10, so everything is outperforming the dollar. The dollar is still relatively weak. Here's where the euro is, and here's the pound, the weakest, but still outperforming the US dollar. These are chevrons here. This is Friday, Thursday, Wednesday, Tuesday, Monday there. So that's the direction of the market, and you can still strong and still outperforming the US dollar. So better to be in other things than the dollar. Best of all, these ones here, and these ones are not too bad either. All right, let's go to the charts now. First of all, the euro. So it's a weekly chart of the euro. We had talked about the significance of this big cigar here from 2020. It came back to it, tested, plunged deeply into it at 118, and then with the RSI going below its 35 level and turning up, we bounced strongly out of it. It was all going swimmingly well until Friday, when we had that savage sell-off in the euro, rise in the dollar, and it really undid all the work of the whole week there, the advance of the whole week. But it hasn't destroyed the bull tendency, but it basically very disappointing for the bulls versus people like us, like me, who are long of currencies versus the dollar. So it's Friday's drop erased all the advance. 120 should support it, this number here. So 120, the high, and then these series of lows here now. So we're close to 120. I'm expecting that to support it. We come down below 50 in the RSI, and this for me would be the completion area, setup area for the completion of a correction in a bull run here. So I shall watch the action now. We're down here for signs of stability, and then maybe a nice white candle here to take advantage of the pullback, which will be complete. I think this was just pre-holiday profit taking after a very good run that's lasted for 4 weeks now. Going to sterling. So on the weekly chart of sterling, I'll just start with that. We are consolidating here at holding support, important support at 137 here, holding above it, but the MACD is negative here. It's not looking so good at all. It was looking good before, but now it isn't. It's stable, you can say that. It's not horrible or anything like that, but it's not looking as good as some other currencies. You know, it's the furthest to the west of all the G10 currencies. So here it is, not looking so good. It's moderately steady. The RSI has come down below 50 here. It's corrected, but I would go elsewhere to participate in against the dollar. Best is the Norwegian crown. And here it is. So this falling here is the crown strengthening, and I think we've got a bit of an opportunity here. I put this downtrend line in the dollar as a dashed one because it's not well drawn. We penetrated it with that little spike, but we've definitely got a very clear series of lower highs in here, and we're approaching a dollar resistance level. This was a very important support level here at 835 area, and we're approaching that now. I wouldn't be surprised if this stalls very close to where we are now and presents an opportunity for those of you that are not on board on this one here. The RSI has come above 50 here, and so any sign of weakness here would be a completed reaction in the downtrend of the dollar. So I think there is opportunity in this one coming up early in the week. And I will move on now to the cryptocurrencies because the action is here. Now again, let's have a look at the RRG here, which has been so helpful to us. 2 weeks ago, it told us that Bitcoin was the least good of the three to be in, Ethereum and Litecoin, but particularly Ethereum was best. And now we've got completely different charts through the three now. Ethereum is furthest to the right, outperforming. This is the dollar in the crosshair here, outperforming the dollar and pointing in the northeasterly direction. Going east means it's strengthening versus the dollar, more outperformance of the dollar, and rising, going northerly is with positive momentum. I mean, the chart is near parabolic. It's really rampantly strong, and that's what that looks like in RRG. Litecoin is in the middle of the two. It's really quite correlating with the dollar itself, so you're not getting outperformance there. And Bitcoin looks quite iffy. And so let's have a look at the actual charts now. So we'll look at Bitcoin first, being the biggest one. And here's the chart. It doesn't look so great as it did before. Here's the weekly chart. It's got this consolidation in here. We haven't pulled back 38.2, so that's sort of quite good. But the MACD has crossed down now after having been up since middle of last year. And this is the first time it's crossed down. So, you know, being long of Bitcoin is hard to justify from a technical point of view. In the shorter term chart, it has steadied up. It came up through 35 from below here, and the RSI is pointing upwards, so we're steadying into this resistance area here. The daily MACD has crossed up, but honestly, it's not looking so good. That is quite a toppy looking chart. Litecoin, I think, is looking better. We've got on the weekly chart, we've got the MACD crossed. It's still positive. This is still a bullish cryptocurrency. The RSI on the weekly is steady at the top end of it, looking good. On the daily chart, well, we're below the highs here, but we're coming up towards them. It's had a dip to below 35 and turned up. That was the pullback opportunity for us there, and now it's come up strongly. The lagging MACD is crossing up. I like this one a lot better here. The MACD is pointing upwards. The resistance is not that strong above here, so I think this is about to swing further up. So we might get some sort of catapult catch-up effect in this, whereas the Ethereum is just as shot away and maybe is a bit vulnerable because of its extreme. But here we've got some catch-up potential. So this is the least good chart is Bitcoin. This one has real potential for outperformance because it's coming up from a lower level and looking pretty good. And then Ethereum. Going to the weekly chart here, look at this, it's ballistic shape in here. The MACD is positive and widening. The RSI is extremely strong on here, and no sign of weakness, got to be said. The RSI gave us our tip-off of a pullback here and went down below 50, and that was a great area to participate in it. To rejoin or to join if you hadn't got a position in it. I have drawn this Fibonacci projection in here, A, B, C, D. We've crossed that now, and we should be moving towards 3,600 because I think generally my experience is that if you break the 100% level with a lot of power, we usually get to 161.8. Many people put 138.2% in between there, but you know, I don't even bother because I think that going from 100 to 161, if you go through 100 enthusiastically and don't stall there and lose power, then we usually get all the way to there, and it doesn't really stop or take much notice of 138.2. So I think this is going to, from a technical point of view, continue to move ahead strongly. The RSI is pointing upwards. Obviously, there's no resistance because it's an all-time high in here. It's a great looking chart, looking very strong. Dangerous, of course, because of the high, and it's hard to buy up here and all those sort of things. And really, you should have bought lower when the market gave you the clear message. That's been there and it's been there. Now you're buying it in with into very high momentum. If you haven't got a position, then I would head for Litecoin rather than Bitcoin, and look at that more closely because it looks as though it's starting a swing. Maybe like this bit here is starting to happen for it. So it's earlier in the opportunity. Bitcoin looking a bit heavy. Let's go to precious metals. Now here I think precious metals is changing, is getting a lot more interesting and has some real potential on the upside now. We had that double bottom back at $1,680. We broke the pullback in between here. This is the minimum price objective for that, which is 1830. We haven't reached that yet. We're pulling back now to close to the break point on it, and I think it's just come below 50 here, and you see here the MACD is crossing. So this makes my trading, for me personally, I should be trading it from the long side as it crosses up, and it has dipped to below 50 in the RSI, so that's an opportunity. So I'm looking for steadiness at this point where it is meeting support. So if today we have a nice white candle, or tomorrow have a nice white candle in it, I think this will be the kind of pullback swing that I kind of like. Looking for a run to this minimum price objective here and into this area of resistance here. I'm going to give this a cigar here because it is quite a substantial area of resistance that we're coming into there at the minimum price objective from the double bottom pattern. Let's have a look at silver. We haven't looked at silver for a while. Here's another very interesting, potentially explosive chart here. On the weekly, we are still negative on the MACD, but it's very close to zero. and that's because it's not really bearish. It's because the price has been flat, and it's not a bearish signal. It's just the double smooth moving averages are coming back towards zero, which they would do due to the flatness in the market. So it would easily turn bullish. Now we've got this triangle here. We've got a very clear resistance level here at 2650 area, and we've got these rising lows in here. And I think we're close to, we must actually break out this triangle soon. I think most likely to the upside. We just dipped below 50 here. That for me is a trigger. If I was bullish of it, but I think we should wait for the break point before we do it. But there's lots of room on the upside above us for this. I think it could push higher. Maybe the resistance kicks in a little bit earlier than gold, so maybe more upward swing potential from the gold than the silver, but the two of them are both looking as though they might move higher. Looking at the gold silver ratio, you see it's been flat here for months now. This means you're neither better off or worse off being in silver or gold. Either is good. Of the two charts, I prefer the gold chart to the silver chart. And we've been looking and watching the gold divided by S&P ratio. Is it better to be in gold or the S&P? No, it's obviously been better to be in the S&P than gold, which is screaming ahead. But we're coming towards this level here, which would be a new multi-year low, decade low for gold. So that's a terrible thing that gold has really lost its reputation for being an outperformer. And thinking in the background, the talk of inflation there is in the US economy seemingly building up and being allowed to build up, to stimulate the market. This is normally your hedge against inflation, and it's going the wrong way as a hedge. So basically, all those things you read in books years ago about gold are just in the last years have been proved not to be true. It's just a thing. It's more like a metal, just a metal, really, like copper's a metal. So let's move on to crude oil now. I'll use Brent crude here. Brent crude is on the weekly chart is quite flat here and potentially crossing downwards after having had a reasonable run up. Crucial that we hold this uptrend line here, which is around about 65.40 at the moment. It's quite poorly performing at the moment, and it's come down from 65. The RSI's come down from 65 from above and coming down to 50 now, so gone neutral, let's say. And so I think we're in for a test of that uptrend line, which I hope is going to hold and keep the bullish cause in favor, or increasingly likely it's going to start moving sideways and be a sort of Bollinger Band stochastic sort of trading sell strength by weakness type of market. Sell strength at the upper Bollinger Bands, take a profit at the moving average. Sell at the upper band, take a profit at the moving average type of trading, which is the right sort of trading to do when you have an RSI and an ADX reading below 20, as we have got now. No real powerful trend in the market. Now going to the stock indices, starting with the US 500.
Trevor, can I just butt in here? We have a question actually before we get started on the indices. We've got a question from Jamil. Thank you very much for your question. He says, what is your view on the Nasdaq 100?
Oh, okay, yes.
Because you weren't planning to show that, were you? I don't think.
No, and thanks for mentioning that. Well, the view is we are, this is the weekly chart of the Nasdaq. Now, the Nasdaq was the undeniable leader. Their technology stocks, in particular, the small group of 5, in particular, leading the market. But this is not the case anymore. Technology and semiconductor stocks are in trouble. Some of them are in trouble, but the overall market, as expressed by the S&P 500, is extremely bullish. But it's being led by other things: old economy things, and also by banks, and which I do like a lot. So the Nasdaq is it's close to crossing up again after having had this severe pullback here, and then on the daily chart, well, you know, it isn't looking great. You know, I think here the RSI, see, declining here down towards 50. If we had a strong uptrend like we've got in the US 500, then this would be a buy opportunity, but we haven't got that strong uptrend at the moment. It's quite flat and weak. It should be supported by this previous high at 13,870 here, which is just below us here, and it does look as though it's coming to rest there. But basically, it hasn't got a lot of momentum in the way it had, and it's not the leader that it was. Okay. All right. So going to the US 500, this is a different picture. Here we've got the weekly chart. Look at this here. So the technology stocks, the Nasdaq particular group, is more of a lag compared to the constituents of the broadly based 500 here. The MACD is positive, the RSI is strong on the weekly and still pointing up. No sign of a top here. I have to keep saying that, but you know, obviously it's vulnerable to a sell-off because it's so strong. But in the daily chart, the ADX is rising, the trend is strengthening. The MACD has crossed over because of the flatness that we had pre-holiday here, and then here the RSI has eased back. So we got a bit of a weakness of the strength, if you like, in the market. We've come down to 65 from above, which you could consider a sell signal were the trend itself not so strong. So if we manage to get back to 50, I'd be glad to see that. The last time that we did that was mid-March, and that was down here. And so this one here, wasn't for me a setup for a buy because it didn't come deep enough. And I do hope to see some pullback in this to, so I don't really want to buy into the strength. I've got, I'm in it, but I don't, I would like to get some lower prices, a little bit of correction in the market, a little bit more orderly behavior in the market. So enjoy that beautiful chart there, because now we're going to look at the FTSE, the UK 500 here. So on the weekly chart here, we had the triangle, we had the breakout of the triangle, but what's dominating us here is this big cigar at 7,200 to 7,600, which we are, pretty close to, and is going to, cause us a problem when we get there. But I do think we're going to get there. I do think there's further to go on the upside. The MACD here is still bullish. The RSI is high, but still pointing in the right direction. So right to be on the long side of this, but bear in mind, we haven't got blue sky above us here. We've got heavy cloud, if you like, above us. In the shorter term, the RSI is positive. Here we've got resistance at this high at 70.40 short-term resistance, but it should, with this rising lows pattern, continue on up here. But it's not the best thing to be in, particularly because there isn't that much potential above us before we get into sort of solid wall of resistance. So you'd be buying. Yes, we can get there, but after that it's going to get very difficult. And the other thing I had favoured a lot was the DAX, but I'm less keen on the DAX, the German 30, than I was. So here's the uptrend here, and the powerful break from the new high. We hesitated and then we broke away. I love that. The MACD is still bullish. The RSI is high, yes, but it's not pointing down. It didn't break the 65 level there. But on the daily chart, we flattened out really substantially here. The ADX is coming down quite sharply, reflecting that. The RSI has come up through 50 from below again. This one here, it did here, and it didn't follow through at all. It just stabilized there, and here it's doing it again. So this could be a setup for a buy, but I'd like some more enthusiasm on the upside. I'd like a nice big bodied white candle to feel that this was actually a good buy. So rather flat in behavior here, and I'm not as excited as I was before. And another thing I'm not as excited as I was before was the Nikkei 225, the Japan 225. The long-term chart on this is extremely bullish, So if I just show you here, 20 years is not enough. Let's go 30 years to show you what, to go back to where we were the last time we were here, and to show you the implications of what's going on here now. So let's go back to 1980, before you were born, I'm sure. Oops. Okay, so here's where we are here, 30,000, that's a bit of resistance, but look how I got up here to 40,000, I think it was something like that was the high. I think we got some resistance, but it's ahead of us here, up at 32,000, just above 32,000 there, and I think it should go higher. But at the moment, let me just change this back, otherwise all the other charts will be messed up. On the daily chart here, we've gone flat on this, and that's why it's looking so strange. So that was a mistake on it there. Yeah. Okay, that's it now. Yeah, so that was the right security there, no worries about that. So here we're very, very flat, and it's oscillating now. The ADX has come right down now to 12. It's an extremely low reading here, and so this is a trading thing. You know, sell at the upper band, for example, or use a stochastic, take a profit, the moving average, sell, take a profit, buy, take a profit, sell, take a profit, buy, take a profit, miss this one, buy, and maybe miss this one here. But this is a kind of behavior. It is mean reverting. It is flat. And, you know, in the context of a long-term bull market. So it's lost its sort of rampantness now, and the RSI is sort of rather flat in it. So it's really, I think we're going to have to put up with this for a while it consolidates around here, 30,000, just below the 30,000 level and above the, there, before I think ultimately it does break higher, but that may be actually months away for that to happen. So going now finally to some stocks, just to illustrate, you know, the iffiness of the technology area, the FANG stocks. I mean, this is Apple here. How good does Apple look as a chart? I don't think it looks very good at all. Here, high, higher, high, a bearish divergence in the warning of loss of momentum, high, higher, high, high, lower, high here, there. That doesn't look so good, that chart there. So Apple has lost its shine, needs a repolish there. The MACD is negative. Look at Google as well. Alphabet, where are we? Oh, I've lost Alphabet on my list. I'll take Amazon instead. Amazon is looking best of the group and retesting its old high here, having held 2,900 very, very well, and that's potentially going to break up very, very soon there. So watch out for that one. But oh, here's Alphabet. Oh, I couldn't see that. Okay, so Alphabet on the weekly chart. This is strong. Higher lows. MACD is fantastic. The RSI is making a new high here. and the daily chart's also looking fantastic, even leaving a gap there. So you have to be pretty selective in the technology area. They're not moving as one anymore. They are separating from each other, and some of them looking good, and some like Alphabet, and some of them looking bad, like Tesla. Tesla now, look at this, that's a big drop it had there, and that's where it bought Bitcoin. So now when you buy Tesla, you're buying Bitcoin. A large part of it is Bitcoin. The MACD is negative. This is not attractive to me at all as a security to participate in. But what I do like is the banks, and we talked about this a lot. Bank of America, for example, here, nice looking chart here. Weekly MACD has been bullish since something like March, April 2020. It's been bullish, trading from the long side, looking good. Made this big break to new highs when it cleared 35, 36 area here, and the chart is looking very strong indeed, and it's making new highs. This looks like how the tech stocks used to look, doesn't it? And then the US banks, all of them looking pretty good. Is JP Morgan here, bit flat on JP Morgan, but generally all the banks looking good. And now, how does this spill over outside the United States? It does, actually. And two, I would like to draw your attention to end with a stock where I've found myself saying, earlier when I've been very bullish and recommending the bank stocks, I've always said, except for Deutsche Bank. But that's changing now. Deutsche Bank has really changed its spots here. Look at this weekly chart, broke the high here, broke through 11, held at 10, which is an interesting that it should hold at a round number. Still bullish on the weekly MACD, surging here, gapping higher. Despite it's got terrible news, but the investment banking side is really doing well. The MACD is positive here. The ADX is coming up strongly. The RSI is quite exposed, so correction is possible here. So if you're not in it or anything like that, I would wait. I think we're in for a bit of a correction in it. But HSBC is the other one I wanted to draw your attention to, because I think that's about to make its break upwards. So here it is here, testing this 450 level. I think it's going to break it successfully, and we've had a pullback, which is now seems to be complete. You see it got down here below 35. Here inside a long-term uptrend. That's really good. It didn't, came down through 50 here. I was getting ready to buy it when it came up through 50 from below, but it never did. Then it went down through 35, and now it's came up through 35 from below, and so this was my trigger here. Now it's looking strong and testing this high here, and I think that's about to go, and that could bring in some more buying. Then I'll be doing my Fibonacci projections upwards for that. So this one's about to go there. Okay, any questions, Dan?
No, that's it, Trevor. We only had the one on the Nasdaq today. Thank you very much.
I'll just make one more little comment. I've been favoring Glencore. It's come up a lot, Glencore, but it's coming up towards a very important level now, which is this resistance here, 340, and it does look ready to clear that eventually. So watch out for that for Glencore to get another boost to buy. But it's flattened out recently now. I'm out of it now, but I'm ready to get back in again because I think it's getting ready to surge again. Sorry, Dan.
No, cheers, Trevor. Thank you very much, and thank you everyone for attending. Please join us again, same time, same place next week. And don't forget that we're posting this webinar to our YouTube channel in an hour or so's time. So if you came later or you just want to watch it again from the beginning, you can do so there. And don't forget to subscribe to our channel and click on the bell whilst you're there. Trevor, anything else?
Yes, okay. I'm sorry, I'm going to be indulgent. I'm going to say Santander, another European bank, looking good. Look at the MACD, it's positive. That surge last week there, taking us through these highs here. The chart looks fantastic. Santander, another one. HSBC should be next. Okay, thank you very much indeed, everybody. Hope you can have some holiday, and and I look forward to talking to you next week. Thanks, Dan, for looking after us again, and may the trend be with you.
Thanks, everyone. Bye-bye now.
Bye-bye.